This crypto Fibonacci strategy is the only thing that is keeping you away from making your first $100,000 in crypto. And in this video, I will cover the exact steps that you need to take to start to become a profitable trader. Hi, my name is Alex from AMCrypto, and today I'm going to show you one of my trading strategies that helped me to make my first $100,000. But first, before I actually go into this exact strategy, we need to talk about market structure. We can have in the markets two different kinds of market structure. We can have bullish market structure and bearish market structure. Right now, I'm showing you a bearish market structure. A bearish market structure is defined by a resistance level here in red and by a support level here in green. A bearish market structure starts out with a prior higher high here, then a lower low, then a lower high, a lower low, lower high, lower low, lower high, lower low, and this circle continues until this structure would be broken with a higher high or higher low. Let me move on to the next chart. So here you see that a little bit better illustrated with the higher low, higher high, lower low, lower high, lower low, lower high, lower low. And at that point, when we're reaching here the support level, usually we get a bounce from that back to the upside and start to change structure. Now, when you can identify the point from where we are changing structure and create a lower high, then we can start applying the Fibonacci strategy to find an entry and take profit targets. Here you see exactly what I mean when market structure is going to change. And in the next step, I'm going to show you how we are positioned our entry based on that. So we have here our bearish structure, lower lows, lower highs, continue, hit support, create a higher low, create a lower high. Now we are changing structure, starting to get into a bullish structure, lower high, higher low, higher high. Now structure is changed and we are in a so-called bullish structure and most likely continue the upwards trajectory. Once that is achieved, what we are going to do is we are marking out the last higher low level before we created the lower low, and also marking out here the moment when price action comes and creates the higher low. That will be our entry point, and I'm going to show you with the strategy how this is in alignment with a Fibonacci level. We need the Fibonacci retracement tool to find the exact point for our entry, and now you can see I pulled the Fibonacci retracement level from the lower low to the lower high, and that gave me more or less the exact point here where I want to enter at that higher low, and that is in alignment with really common Fibonacci level, and that is called the golden ratio. You can find it everywhere in the nature. It's basically in every single pattern. It's an art. You can find it everywhere, and that's why it's called the golden ratio. It's also used to determine beauty. Now that golden ratio is the 0.618 and the 0.65. That is creating a golden pocket, and that would become our entry level here. Now, just having the entry is not enough. We need, of course, also targets and where we would put our stop loss. We start off with targets. For that, we are taking the Fibonacci tool once again and pull it the other way around. Now we go from the lower high to the lower low. We have here marked out our potential entry, and now we get our first take profit. Again, the golden ratio, the 0.65, 0.618 is the first target that we have. We have a potential second target, the 0.786. And once we're breaking through that, the next target would be here, the prior lower high, to create a higher high. And that potentially can go all the way up to our resistance level or even beyond that into the extended golden ratio, the 1.618 or the 1.65 level. Here to better illustrate that and to recap that once again, we have here the entry level. You also get an alternative entry level just in case that we move from that point a little bit lower, then the 0.5 on the Fibonacci retracements becomes your secondary entry. So usually what I do is I place here around 50% of the position size that I want to trade with, and I let's say I get now into this trade, but it keeps going a little bit lower and it goes to 0.5. Then I add here another 25%, and let's say we are bouncing from there back into the golden ratio, and now coming back, retest this, bounce off to the upside. Then here I enter with the remainder of my 25%. Now I'm 100% allocated in this trade. The stop loss is the first higher low down here that we created in that bounce. There I put my stop loss. Now we want to find out, is this a really good risk to reward ratio and makes it statistically sense for us to take the trade. But first we need to mark out our take profit targets to determine the risk to reward ratio. And again, for that we had pulled the Fibonacci extension levels, and you see here first the golden ratio, the 0.65 based from our entry here, is the first take profit. The 0.786 is the second take profit. Then here this prior lower high is our third take profit, and then we leave a so-called moon back if we go all the way up to the resistance and target the extended golden ratio, the 1.618, the 1.5, that becomes our third target. So now again, how would I take profit here in terms of percentages? I would go and take on the first take profit point 10%, then on the next one 25%. Here I would take again 25% and 40% all the way up here. But while I'm taking profit, I'm also moving up my stop loss. You know now the entry was down here and the stop loss is down here. Let me actually show you here. There is the stop loss. Now what I do, once we hit the first take profit point, I move my stop loss to my entry level. Now your trade is risk-free and you walked already away with a little bit of profit. Let's say we hit the second take profit point. What I do then is I raise my stop loss to the first take profit point. Now in any case, I gonna walk away with a little bit more of money, because in the worst case I get stopped out on the first take profit point, and whatever percentage is between the entry and the first take profit point is what I walk away with. And we're going to repeat that for every single take profit point that we are going to hit. Now let's say we hit the third take profit point, I raise my stop loss to take profit 2. We hit the fourth take profit point, I raise my stop loss to take profit 3. Now you see the remainder of the position will be bigger and bigger in terms of profit, because I raise and raise and raise my stop loss to the upside. And of course, if we are hitting the first take profit point, usually you're then completely out of your position and don't need to raise your stop loss anymore, because the trade is closed. Another illustration how this actually works. As I set the stop loss down here, the entry point is down here, just for your better understanding. And like I said, you keep just raising your stop loss after each level was hit to the prior level that we had reached. Now in terms of the risk to reward ratio, if we would go all the way up to the fourth take profit point, that would give us a total profit here on that setup of 23.43% against the stop loss of 3.66%. And you see here already the risk to reward ratio would be 6-4. That means for every dollar that I'm risking in this trade, I'm making potentially $6.4. That is a really good risk to reward ratio. You want to make sure when you are trading that you have a risk to reward ratio at least of 1 to 2, and even better 1 to 3. These are usually the trades that I like to take if I have at least a 1 to 3 risk to reward ratio. And here this is more than given. Here it's actually 1 to 6.4. in that specific case. Now let's go to a live example. Here I have already something prepared for you. As you can see, I have drawn in the structure that we have. We had here the last higher high, then we started creating lower lows. and here lower high, then again lower high, lower low, lower high, lower low, lower high. Then we created a higher low, and then I have drawn the Fibonacci retracement from the prior lower high to the lower low, and that gave me here my golden ratio. And you see the current price action is bouncing off that golden ratio. So now I can go and again place here my entries. You see golden ratio is the entry. Then we have the alternative entry at the 0.65. I have my stop loss at the prior lower low, and I have also take profit targets when I draw my Fibonacci extensions. Here you see now my take profit points on the Fibonacci extensions. The 0.65 again, here that prior lower low is the one that I'm targeting first on the way up. There is my first take profit point. The 0.786 becomes my second take profit point. Then here the golden ratio is the third take profit point, the extended golden ratio. And then the resistance, here that prior higher high, will become my fourth take profit point, just in case that we are failing to break above here and create a new higher high, because that can always happen and you want to be prepared for that. And again, my take profit ratio will still remain the same as I had explained prior, where I take 10%, 25%, 25%, and 40% on the remainder, and I keep trailing up my stop loss at every take profit point to make sure that I definitely walk away here with as much money as possible and don't leave anything on the table. Of course, here you can again place your risk to reward ratio, the long tool. So the entry is down here, the stop loss is here at this level, and then here fourth take profit point. And you see even on that trade, it is at least a 3.49 risk to reward ratio, 1 to 3.49. That means for every dollar that I'm risking, I'm making potentially $3.49 back, as long as the trade is running in my favor. And here you see the first entry is not reached in that case, so I would be waiting and sitting on my hands until I reach that level with a confirmed 4-hourly close, and then enter into this position with the potential upside target here of 17.46%. The Fibonacci strategy are one of the basic strategies that we are using, but most traders will say this is not enough to begin with, but they forget to tell you the strategies that actually work. My partners and clients that work with me use a system called the Altera Fib Algo. This trading strategy and system uses a variety of strategies that make them $20, $50, even up to $100,000 every single month. And you don't need to take my word for it. Just look at one of these screenshots that one of my clients sent me. Here he made alone almost $25,000 in the last 2 days. And also here a different account, also already $8,000 in realized profits and still over $20,000 in unrealized profits. For those that are serious about making their first $20,000 in 3 months, better listen closely now. I'm gonna take you with my team in the first month to $5,000, in the second month to $8,000 to $10,000, and in the third month we usually excel by surpassing the $20,000 mark. But in the third month you will have so much knowledge that you basically don't need our help anymore and can stand on your own feet to make all these trade decisions. If you're ready to put in the work, learn how to control your emotions and make your first $20,000, then let me help you before the real bull market starts. Take my free test on what strategy can be used based on your current knowledge and schedule a free strategy call, 30 minutes with me or my team, and let's figure out how we can move forward and turn you into a profitable trader. Let's go. If you enjoyed this video, guys, then make sure that you subscribe to the channel. Leave also a comment if you made some money with this strategy. Don't forget to activate the notifications, and I'm going to see you then in the next one.